Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, July 19th, 2006, and we had a pretty big day in the markets here today. And looking at the Qs right now on the screen, daily picture of the Qs, we can see that the market did follow through on yesterday's strength and came up close to that 10-day declining 10-day moving average. Yesterday, I started getting a little more bullish about this market based on the divergent MACD as well as on this hourly time frame here, as well as the beginnings of the rally that we saw yesterday when we had this inverted head and shoulders pattern that was evident not just on the Qs but on the S&P and the IWM as well. What we were looking for today was a move up towards 3630 where we thought it might find a little bit of resistance as it has been finding resistance there lately. And I was hoping for a little bit deeper pullback closer to about $36 a share today. That never occurred, but I said that getting above the $36 level could set this market up for a rally up towards about the $37 level. And you can see we fell short of that. And where the market really came into was about this declining 10-day moving average for now on the Qs. Now, Friday we've got options expiration day, so did the market do most of what it was going to do? That might be the case. Is this going to be another bear market rally that falls flat on its face like our friend the bear yesterday in that video? We'll see, but certainly, these rallies inspired by what Bernanke has to say haven't had any sticking power at all so far. So let's not get too excited about one day's activity. And another common theme for a lot of traders is, they get depressed about a day like today. You see the market up 2%. You hear these clowns on CNBC talking about how it's the best day since who knows how long. But the bottom line is I think if you made real big money today, you were probably not positioned properly. And I mean that you probably had too much risk for where we really are in the market. To come in today, fully positioned on the long side would have been a huge mistake. Now hindsight's perfect, and you could have said, well, wouldn't it have been nice to get this big move? Absolutely, it would have, but we had no idea what was going to happen with these Yahoo numbers yesterday. That put a spook in a lot of people, I'm sure. But the bottom line is with Yahoo too. Here this stock is in deep trouble, and this is something that should be avoided. Don't go anywhere near this stock. It is a big problem, and it followed the pattern of what a lot of stocks do, big tech stocks do. On the days they gap down, they suck in people at the beginning of the day who are looking for that bounce. That bounce never occurs, and it closes near the lows of the day. So Yahoo is a very dangerous stock in here. It's breaking down. It's in its own little bear market that is just really officially entered here on the long term. So stay away from Yahoo until it shows sign that it's going to start to turn around. To me, it's no different than eBay. When eBay first gapped down, back in January of 2005, that's when the big problems occurred for eBay. And now, who knows what's going to happen with Yahoo? But the point is, it's in a bad position right now. Speaking of eBay's got earnings after the close today. Apple, Qualcomm, Intel, those are just some of the big companies that are reporting after the close today. So again, today was up, but let's see what tomorrow brings. Let's go ahead and take a look also at the S&P 500, the SPY. Right now we've got the 50-day moving average crossing down through the 200-day moving average. Now a lot of people call that the death cross or whatever. I'll do a little. I'm going to show you something here in the next week or so that it's not as big a deal as a lot of people make it out to be. That it's a horrible way of timing your shorts, but it came up to today close to the conjunction of where that 50 and 200-day moving average are. Now, what I'm looking for is probably that area is going to continue to act as resistance. So we'll see if this 200-day moving average acts as resistance along with that 50-day moving average. A lot of people probably looking to liquidate near those levels. And the S&Ps came up to right about where I had said yesterday that we were looking for them to. I had mentioned that we were looking for if it could break past here and get above that 5-day moving average, that it probably ought to run up towards about 126 or so. And we closed at 125.98. So I think right now that the markets are due for a little bit of consolidation after this big move, and that's typically what occurs. and it's going to continue to be a stock picker's market. That's the theme that I'm going to stick with here. There's going to be good opportunities on the long and short side. Now, let's go ahead and take a look at some of the opportunities that we've been talking about lately. The only position we still had open with this was this CyberSource. We nearly got stopped out yesterday with our stop at $10.76. The low was $10.77. Had a little bit of follow through today. This company doesn't report earnings till next Wednesday, so I think you're fine to hold it for a little bit. Has a little bit of resistance short term at about 1140 rather. But I would say at this point, raise your stop up now below this low here. This low is 11.15, so let's set our stop at about $11.13 in CYBS. Isolagen, I guess that's what I'm going to call it at least. I had suggested a purchase of 345. We got that move over in here, and then at that point the stop was 334. Now I think you want to raise your stop to about a break even in ILE. ILMN, Illumina, I had no idea that earnings were coming out. I guess they reported last night. We were looking for a pullback in this stock. The stock gapped much higher. Just a quick note here that, the primary trend is higher. News and surprises tend to follow the direction of the trend, just like we saw in CNC. CNC, the primary trend was lower. They surprised lower. The primary trend in Yahoo was lower. What direction does the move come? In the downside. So that's just something to keep aware of. Don't be trying to buy these stocks hoping for a bounce in front of earnings or something like that. OpenTV, symbol OPTV. It suggested a purchase of 344. We got that. Now what we're looking for, we had suggested a stop at 338. At this point, I'd say keep your stop at 338. If you want to raise it a penny, go ahead. But the daily chart still looks good. It's got to get above and hold above that 50-day moving average. But again, it's the direction of the 50-day moving average that's still higher, so we're going to continue to give it the benefit of the doubt. I was looking at E-Trade as a potential short. As it broke down, as it showed weakness. We never got any of that weakness, so there's no reason to look at E-Trade as a short. Maybe in a few days as it comes up and perhaps finds some resistance near this 50-day moving average, consolidates, and then starts to roll over. But right now there's no evidence of sellers in E-Trade, so I'm going to scratch that one off the list for now. Omnicare, symbol OCR, we were looking for a rally up towards about the $47 level, and then to sell it short as it showed weakness. So we had this rally, strong rally. If you had gotten short this stock, let's take a look at a 1-minute time frame. We'd seen that, this might have been the place you'd gotten short. But look at this dotted moving average right here. This right here is the VWAP for today, the volume weighted average price. What I want to tell you right now is if you got involved in this stock right here, hopefully you scalped it. But the point is we want to make sure that when we're selling these stocks short, after strength like this, that it takes out that VWAP, that it can close below it. That VWAP means the volume weighted average price. It's the average price which, if you take all the volume at every price, add it up and divide or times, multiply it by the volume at each price, it gives you the average price that the stock traded at adjusted for shares. So the average price the stock traded at today was about $47.14. Now it's a moving average in there. But basically, if it breaks below that at this point right here, for instance, it would mean that most people, the average position, had you been a buyer, would be losing money. So when that happens, that tells you that these people would be trapped on the long side, and then they might liquidate and put further pressure on the stock. So altogether today, it was a bullish day. It was nice follow through after what we had seen yesterday, and we'd seen this rally setting up. And did the market rally because of this MACD? No, but go ahead and take a look at that MACD video. I'm going to post it again. If you're not familiar with the strategy that I'm pointing out, I'm going to post that again so that you can look at it and take a look at the strategy that I laid out. Basically, the strategy is when you see the MACD divergence, you then buy it as it crosses above the longer term moving average with your stop then above the blue moving average. It's a just a system type trade. It seems to work very good, and I'll post that video so you can go through the psychology of the setup. My name is Brian Shannon. This is Alpha Trends Blogspot. Thanks for visiting. I'll be back this evening with another video with fresh ideas for trading on Thursday. Thank you.